Hey everyone, how's it going? This is Gersha from Technical Option Traders. So let's get right into our technical analysis and let's talk about what's going on in the S&P 500. So there's big news in the market with the Bank of Japan coming out that they're going to start controlling the yield inversion, which is actually very mixed news in the market as it's being interpreted. And as you guys can see, the yields right over here have gone parabolic since last night. So that's something that we want to keep our eye on, okay? But until then, this bear flag on the S&P 500 is broken down. So this, if you guys have been following me and watching my videos, I did mention this, that this could happen. And if it does happen, what could happen following that? So we're going to follow up with this. So we have a downtrend line. The downtrend line pressure is still intact. All right, so this downtrend line is holding really well, and it's just pushing the pressure a lot lower on the S&P 500 with the continuous rejection at these levels, and obviously with rising selling pressure, so more participation on selling is giving more conviction towards the downside. Now we've had a continuous days of sell-off, so we want to be aware of that. Market never goes in one direction continuously. There's always a relief or a bounce. So this level, which is the 395 level, I mentioned multiple times. The first trade I did mention on live videos here that did not work out for me. The second trade did work out great, and now we're going to have a pullback. If we are possible to have a pullback, there's a gap here. It could go for the gap fill all the way to 390 and then come back down, right? So that's something that you want to keep an eye on, that we may start to get some sort of relief rally going into the end of the year. However, the main levels are 395. If we do go above it, we'll get to 404. However, no trade until this downtrend line is broken towards the call side, okay? That's just strictly my trading style. I don't like to do that. And the reason why is I'll show you when we look at a smaller time frame. If we look at a smaller time frame, there's a lot of volatility in this market when there's a lot of uncertainty. So we have consistent selling or big moves down that happen overnight and continue to flow, or they kind of pause during the day, which cause, if you're a trader like me in options, that's not something that you want to see, because if the market starts going sideways, your options premiums are going to get crushed in a volatility crunch, right? So that's not what we want. And this is what we have today. Even though we have a sideways move, the VIX is getting absolutely crushed. So the next level for the S&P 500, what I want to do is I want to watch and see a consolidation here between 390 and 375 to see what the price does and how the volume picks up. And if it does break 376, I want to see the volume break on it to 368. Then we're going to push down to 349. Right now, the S&P 500 looking very vulnerable, and that's something that we want to keep our eye on. Okay, looking at the daily on the S&P 500, I'm going to do a comparison here to the VIX. What's going on here? Okay, as you guys can see, okay, so this is the S&P 500 over the VIX. Okay, so what this is telling us, every time the VIX is populated or blown up like that, it has indicated that this is like oversold, or the market maybe due for a little bit of a rally, right? So if you look at these peaks, right now we're at record lows. Prices settling and consolidating on the S&P 500 right about here. So this is lower than this. And if we look at the VIX is kind of going down. So that means that we're okay with the price here. We're not in panic mode yet, that we're accepting this price. So does that mean that a lot of participation is expecting the market to go a lot lower, because there's not a lot of panic? Every time we've had spikes, they have indicated a good buying opportunity, or a relief rally opportunity, so to say. And every time the volume has kicked up quite a bit, that has indicated like this, you so to say, on VIX. Look at every time VIX is populated like this. This always has indicated to us that, okay, the market has bottomed. Right now, we don't see anything like that in the market, so we're going to be continuously cautious that the bottom is still to come, and VIX will show us when that time is there. Okay, so for now, we'll just keep an eye on the S&P 500. We'll just see how it does, and let's focus on the triple Qs here. Triple Qs, they were trading in this price range, which is a volatile price range, and now you guys can see a complete breakdown of it. Triple Q is right below their line, their bear flag. We can get a pullback to here, which is the 379 level. So that's a level that I want to mark. We can get a pullback to here. If we do get a pullback, this could be a nice little bounce, and then we get a push back down. The downtrend line is quite severe on the triple Qs, and it's holding really, really well. But if we do get a reversal to this side, all the way up to 292, I would say that means the down shift is, going, is getting narrower. And if this is a pivot point, we can get a push up. Now, there needs to be a catalyst in the market. Right now, we're not seeing any interest release. We are seeing the opposite. We're seeing the yields actually go up. So that's something that I would be concerned with. However, triple Qs also, if we look at the weekly time frame, we've got a head and shoulder pattern going on here. So if we do break the 254, this is a big level on the weekly. We're gonna go down to about 234 and then go much lower to about 180, 188. Okay, that's something that we want to keep our eye on. We don't want to get confused by what's going on with the triple Qs and the rest of the market. Okay, because tech stocks do tend to perform poorly when we have a rising interest rate environment, right? So looking at Dow next, Dow is somewhat of interesting here. Dow had this crazy up move. I did mention this multiple times that this level is important for us. When something goes vertical, it's going to have a pullback, right? So we are pulling back a Dow substantially. We'll see if it consolidates and we get a push above. If I do get a push above, I'm watching 335. To go lower, I'm watching 322. These are the two most important levels for me. And as we can see, this trend line down, or this downward pressure, is important because we have rising sell volume. That's something important that we want to keep our eye on. So the pivot level for this down move is up here to get above 348. If we cannot get above 348 and we consolidate below that, that's a negative sign. That means another catalyst down the road can push Dow Jones a lot lower. Looking at IWM here, IWM, we've broken this trend line quite nicely, pushed down here, now holding and respecting the 170 here. Dow Jones has had multiple tests on this level right here, which is the 165. Multiple tests, there's a gap, it filled that. So if we go below 165 now, we're going to head way lower to 155 towards 142. That's something that we do want to keep our eyes on for IWM. Unfortunately for IWM, this is not looking good. I would be very, very worried if I was trading small caps, because small caps looks like they're about to blow down. But once again, I wouldn't get ahead of myself. I would want to wait until 165 is broken and with exceeding volume. Okay, so the volume has to pick up. If it's breaking with low volume, I'd be very, very cautious. Right, if we look at a smaller time frame on IWM, just like the rest of the market, it's just consolidating here, not a lot happening. Okay, so that's something that we do want to keep our eyes on. The other section that we have is gold. I've talked about gold multiple times, and I did say that gold is something that we do want to keep our eye on, right? So gold had a nice move up, consolidation, now it's pushing back up higher. Gold, it would be nice if it breaks this pattern right about here, which is 173 to 175. If we get a break above 175, I'd take a trade, push up to 179, 185 around this region. Gold is looking definitely strong right now, especially on the daily as well. So this area of consolidation, I was worried about the sell volume that did happen here. A lot of offloading looks like it, but now we have this gap up. As you can see, there's gap up, gap down, gap up. A lot of uncertainty and a lot of volatility around gold, even right about here. Huge gaps. Whenever you see a gap up, that's always led by volatility and uncertainty in the market. So that's something you guys want to keep your eye on. Last time the market did go down, which was in 2008. Let's compare what happened with SPY. Right, so let's take gold and put it on line chart. So this is something that we do want to compare to on a monthly. So this line right here is SPY and the blue is gold, and this is 2008 right here. So when the crash went down, gold prices spiked, right? So once again, 2020 we came up to was right about here. A SPY came down right about here, right? So this is COVID crash right here in 2020, and look at the price of gold ever since then. So if we do get a crash to the downside, so gold could be our leader to the upside. So that's something that we do want keep our eyes on. We don't want to ignore. So that's something that we want to continue to focus on. I will be doing more of these comparative videos, and this is something that's very, very important to us to understand what's going on in relationship to precious metals and the market. Okay, so gold right now is something I'd keep definitely an eye on. 175 is key level. If we break above that, we're going to push a lot higher. Okay, now looking at VIX. Like I said, still in this little saucer pattern I was talking about. I want to see VIX get below 14, and then I'm more comfortable, right? So if VIX gets below 14, that means all the fear is kind of gone, and the market may be setting up for another bull trend. But like the example I just showed you guys, I don't think that is going to be the case anytime soon. All right, guys. So now we're going to talk about the indexes. So these or the sectors. So these are sectors that lead the S&P 500. So we got starting off with energy. Energy is having not the best months here. Energy is breaking down as well. So energy key level of support's holding up really, really well, protecting the double top breakdown so far at 82 to 81. If this holds up and we push back up, energy could be the leader going towards the end of the year. Or if we break down from this, this trend line is something that we're going to want to watch to make sure that price does not go below this level. Next level is XLF, or next sector is XLF, sorry. XLF is financials, and these are the banks. This is something I'm going to be concerned with. There's a lot of news circulating right now in the markets that is talking about that they're doing cheap borrowing or discounted borrowing, and we should keep an eye on that. So you guys can search up on the news. XLF is doing a complete reversal, kind of like a triple top action here. If it breaks below 32.91, we can head towards 29. Okay. XLV, which is healthcare. The healthcare stock sector is not looking good at all. If I was to look at this, right, so broadening formation right now. So I'd keep an eye on this, and we're headed lower before we do break out to the upside. So that's something I would be kind of watching for. If we do break down below here, we can push a lot lower. But XLV is something I'd continue to watch. I think XLV is a sector of the future, and we'll continue to keep an eye on that. XLK Tech, we all know what's going on with this already. Bear flag breakdown. Big level for it is at 114. If 114 breaks right about there, we're going to get a big move to the downside on tech. And I wouldn't be surprised if this does come with Apple breaking down, Netflix breaking down. That's something that we want to keep our eye on. So then next thing is we have consumer staples. Consumer staples showing a similar pattern to healthcare, right? Broadening formation as well. There's only two touches here, but still, we'll see if we come back all the way down to the 60s level. Main level of support on consumer staples is here, and this price range right about here. So 68. So if we get below this, then we got a big problem, and we can head a lot lower. Okay, so XLY, which is consumer discretionary, this is already broken down, right? So this sector is like done so far. So what I mean by done is going for this gap fill, which happened in toward the 2020 crash, and the big level of support now is at 122. We need some sort of relief rally in this, and this is something important to keep an eye on, that this individual sector is breaking down. Some of the other sectors that's doing really well right now is metals and mining, which makes sense. That gold is up and XME is down. Okay, so that's something we want to continue to watch and monitor as into what's been going on in the overall market. I hope you guys enjoyed this segment, and I'll see you guys tomorrow.